You may be wondering what the whole process is to buying your first home. Should you first find a home? Should you first go out and see if you qualify for a loan? There are so many questions in this process. Hello, this is jsock, owner of Sock Mortgage, and in this video, I'm going to share a list of 10 mistakes that first-time homebuyers should avoid when buying their first home. With this list, we will begin with your mortgage pre-approval and move you all the way through to the end with your move-in. One thing you may want to do is enroll in a home buyer education course with your lender. If they don't have a program, make sure you're working with a lender who is knowledgeable and not just working from a call center. Yeah, those are great and convenient, but they don't know the ins and outs of our area. Try finding a local lender in your area who can meet with you to walk you through the home buying process. So let's get started and cover those 10 mistakes first-time homebuyers should avoid. Number 1, assuming you need 20% down to buy your home. First off, don't assume that you need 20% down for a down payment. There's a common misconception among first-time homebuyers that you need a 20% down payment to buy a house, but it's not true. A larger down payment can benefit you with a better rate, lower monthly payment, and increase your equity, so it's a great choice if you can afford it. Otherwise, you can buy a home with as little as 3% down, depending on what mortgage loan you qualify for. Different loans have varying credit scores and down payment requirements, and none of them start off at 20%, just in case you were wondering. So decide what down payment amount is right for you based on your personal financial goals and budget. Most first-time homebuyers are making a median down payment of roughly 6%. So keep in mind, you don't need 20% down. Number 2, waiting to start saving, okay? Let's talk about that. You'll need cash up front to cover your down payment and closing costs, so you'll need to be prepared for that. Plus, you may need to purchase things like appliances, new furniture once you're moved in, so be prepared. Create a separate account for you for home buying savings so you know exactly how much you have to contribute to your house. Automatic deposits can help you stay on track and grow your savings without having to remember when to contribute and how much to contribute. Just set it up and forget it. Number 3, this is a very, very important one. Saving for down payment only. The third mistake to avoid is only savings enough for your down payment. Again, we talked earlier, 3% down is as little as you can get down. Yes, your down payment will account for most of your home savings goal, but it's not the only cost to consider. You'll be responsible for several closing costs when you buy a home. Closing costs can include some of the following expenses. Number 1, down payment. As we mentioned right off the bat, at least 3% of the home's purchase price depending on the loan that you choose. Number 2, loan origination fees. That's what the lenders charge you. Could be 1%, could be 2%, could be 3% depending on who you work with. Make sure you work with a local expert. Title insurance. This varies by locations and home price. Homeowners insurance. You're going to need at least 1 year premium. It's either going to be in the loan or paid up front. Private mortgage insurance. Some of them can be upfront premiums. Some of them are paid monthly. Property taxes. 6 to 12 months needed to make sure you build your escrow account. Your additional escrow fees, typically 2% of the home's purchase price. You also want to save money for your move-in plan. This may just be a couple $100s for professional movers, new paint, little stuff you want to do. You may also want to install a fence or purchase new kitchen appliances. You want to be prepared. You'll be able to better estimate your moving cost once you choose a house, but anticipate these extra expenses from the beginning. Don't let those catch you off guard. So the fourth thing we're going to cover is buying more home than you can afford. The fourth mistake you can make here is just that. Receiving a mortgage pre-approval for a larger loan than expected is exciting, but that doesn't mean you should take out a mortgage that large. You need to know how much you can afford to pay on housing expenses each month. Create a budget that makes sense and gives you some wiggle room. Take into account your monthly income, reoccurring expenses, and savings goals to determine how much house you can afford. Don't get taken by a lender that just wants to give you more home for the sake of more home. Buying more house than you can comfortably afford may generate homeownership stress and make it hard for you to meet other financial goals. If you think you can afford more than you currently pay in rent, try following that budget for a few months and contribute the extra housing costs to your savings. Make sure you're okay to actually obtain and hold that new mortgage. Now, you'll see if that's going to be a comfortable amount to spend on housing and how it impacts your finances before making that commitment. Essentially, create a dummy account to see what it'd be like to put out that money each month and what that does to the rest of your expenses. Number 5, getting pre-qualified instead of pre-approved. This is a huge mistake. Could be number 1 on the list, but right now we have that number 5. So mortgage pre-qualification can provide you an estimate of what loans and rates you're eligible for, but it's not a guarantee. It's also not a good representation of what you actually can do. A mortgage pre-approval letter typically guarantees a mortgage amount and interest rate and gives you buying power to submit an offer on a house. Don't get confused. A pre-qualification and pre-approval is not the same. If you're serious about home buying, you want a mortgage pre-approval letter today. So number 6, buying without a long-term plan. Okay? The 6th mistake that you can avoid is just that. Okay? Buying a home is probably one of the biggest investments you will make in your lifetime. And you want to stay long enough to build equity. Your first home doesn't have to be a forever home, but having a long-term plan can help you choose a house that fits you and your lifestyle goals now and prepare you for future changes. Be sure to balance your long-term needs like growing a family or career goals with what you can afford and what's available in the area today. Number 7, passing on a home inspection. This is a huge mistake when you're buying a house. It may be tempting to save some money and skip out on the home inspection, but if you are buying a home that is over several years old, you want to most definitely find out what's up with the home you are moving into. A home inspection is different from an appraisal. The appraisal will provide the value of the home and may show some items that require repair, but not all of them. The home inspection is just that, an inspection of that property to find out if it's in working order. The home inspector will evaluate a house to identify any major structural issues, home repairs, and the condition of the included appliances. You wouldn't buy a car without test driving it. There's no sense on buying a house without having somebody take a look under the hood. Their goal is to make sure that the home is livable and that everyone fully understands the house's condition before the sale is finalized. Number 8, and this is probably the hardest one to avoid, is making an emotional decision, okay? When you are looking to buy a house, it is an emotional decision, and there's no question about it. Your first home is going to have a special place with you no matter what. And sometimes it can be hard not to let your excitement take over. It's also a large investment that you should make rationally, considering your personal needs, your finances, and any of your long-term goals. Create a list of needs and wants so you can judge a house and the community by how it realistically fits your lifestyle. Stick to your budget and talk the purchase over with your real estate team or a friend for an additional perspective, okay? Sometimes it's hard to just not get, tunnel vision and go with the first thing you see and the first thing you love. Get outside help if you can. The 9th mistake you can make is assuming that you know the local market, even if you've lived there your entire life. Your real estate agent is the person that's going to provide you with a local comparative market analysis, or CMA, to inform you of other offer letters and negotiations. A CMA compares recently sold and similar valued homes in your location to determine a fair market value. The process is separate from a home appraisal and tells you how much the home may sell for and how quickly, considering current market conditions and trends. So don't just assume you know the market because you live there. Use a real estate agent and use their expertise for your advantage. It'll save you in the long run. Number 10, opening or closing lines of credit, okay? So I know it can be tempting before you close to start messing around, take new lines of credit, but do not do that. After your offer is submitted to a house, the lender will perform a final check before providing the mortgage loan. New credit inquiries or lines of credit could impact your mortgage total and rates, potentially delaying the closing. And that's the last thing you want to do when you've come this far. Like we said, this is an emotional decision. It's an emotional process. Make sure you check all that stuff out before. Now, be sure to work with a lender on anything you need to do and don't do before getting your home. Also, don't make any large purchases like buying a brand new truck that might look good in the new driveway. If you don't get your loan closed, you won't ever get to see it in that driveway. Buying a home requires new information and challenges, but an experienced real estate and lending team and plenty of research can help you avoid these first-time home buyer mistakes. Hey, thanks again for watching. If there's anything we can do to help you with your home financing goals, please don't hesitate to call. This is John Sock, owner of Sock Mortgage, and you can find out more about us online at sockmortgage.com. Call me directly at 586-371-6104, by email jsock@sockmortgage.com. Also, don't forget to like and subscribe some of the other great videos in our YouTube channel. And if you like what you see, share it with some of your friends. If you want to connect with us more on social media, reach out to us on our Facebook or Twitter account.